The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages.
U.S. President Donald Trump tells the nation the Middle East war is nearing an end, but offers no signs of de-escalation, vowing instead to keep up strikes against Iran. Trump's escalation threat sends oil surging, WTI and Brent back above $100 a barrel. Wednesday's rally now a distant memory, with Asian stocks in the red and European futures pointing lower.
Trump also issuing a stark message to America's allies, challenging them to reopen the Strait of Hormuz themselves, insisting the U.S. doesn't need the oil.
Build up some delayed courage. Should have done it before, should have done it with us, as we asked. Go to the strait and just take it, protect it, use it for yourselves.
There's no doubt the bumpy ride on markets continues today as U.S. President Donald Trump has reiterated the war in Iran will last another 2 to 3 weeks, saying in a primetime address to the nation that Washington is getting very close to ending its military campaign. However, the president also appeared to dampen hopes for an imminent de-escalation, saying Washington will hit Iran extremely hard in the coming weeks.
Thanks to the progress we've made, I can say tonight that we are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death. They're all dead. The new group is less radical and much more reasonable. Yet if during this period of time no deal is made, we have our eyes on key targets.
Well, the market's certainly not hearing what they thought they would hear from that speech. And don't forget, about 24 hours earlier, the word ceasefire had been floated around the market. Trump himself posting this on Truth Social, suggesting that that had been part of the discussion, but that was not what was communicated to the markets last night. And so again, the scenario that we've got is whether we see an extension of the conflict here that takes out key infrastructure, because last time we were talking about escalation, it was whether the Iranians could also target infrastructure, which would have an impact on the energy situation, impacting the world economy, and not just for a matter of weeks. We're talking for months and perhaps years to come. The other point here is whether there could be any resolution for the Strait of Hormuz. That was also a dangling question. And as you can see, markets have responded. Brent has marched higher, 107.79 this morning. 6.5% plus spike, 5.7 up on WTI. And again, gold prices, we've seen this over the course of the conflict, not proving any safe harbor for investors, down again 3.6%. And let's get out to Dan for more. Dan, just walk us through the escalation and the various different points that markets need to be thinking about.
Karen, good morning to you. Well, President Trump has addressed the nation on the Iran war, and the markets have already delivered their verdict. As you've been explaining, Asian stocks are racing gains, US futures dropping, and Brent crude shooting up around 5% above the $100 a barrel handle. It seems as if the rally that was built on hopes of a swift exit is now running into the reality of what President Trump actually said. Investors were basically looking for 3 things here. Number 1, a clear timeline. Number 2, a diplomatic framework, and above all, number 3, a credible path to reopening the Strait of Hormuz. And the bottom line is they got none of those things. In this 20-minute address from the White House, Trump declared that the US military objectives would be completed very shortly and made what was perhaps his most direct sales pitch so far to the American people since the war began a month ago. More than 12,300 targets struck, more than 155 vessels sunk, the Supreme Leader Ayatollah Khamenei killed. Tactically, the US and Israel have inflicted enormous damage, but of course, Iran has tightened as well, not loosened, and its grip on the Strait of Hormuz has hardened against Washington as well, not collapsed. And as one analyst actually put it to me this morning, the question was never whether Iran could be wounded, it was whether coercion would produce capitulation, and a month in, it still hasn't. And in particular, on the Strait of Hormuz, which is really critical for market investors, President Trump was characteristically confident and also characteristically vague. The president said it will open naturally once the war ends and called on other countries to just go to the strait and take it for themselves. Now, as you would expect, that has prompted quite a sharp response from the president's proponents, including the Democrats, who say the president is walking away from a problem that he created. And of course, his abdication of that responsibility will also no doubt cause some angst here in the Gulf capitals as well. Here's the president speaking earlier.
The countries of the world that do receive oil through the Hormuz Strait must take care of that passage. They must cherish it. They must grab it and cherish it. They can do it easily. We will be helpful, but they should take the lead in protecting the oil that they so desperately depend on. So to those countries that can't get fuel, many of which refuse to get involved in the decapitation of Iran, we had to do it ourselves. I have a suggestion. Number one, buy oil from the United States of America. We have plenty. We have so much. And number two, build up some delayed courage. Should have done it before. Should have done it with us, as we asked. Go to the strait and just take it, protect it, use it for yourselves. Iran has been essentially decimated. The hard part is done, so it should be easy. And in any event, when this conflict is over, the strait will open up naturally. It'll just open up naturally.
President Trump speaking earlier there, effectively saying his war against Iran has made the region, America, and the world safer. He doesn't need the oil, and as a result, reopening the Strait of Hormuz is now going to be everybody else's problem. And of course, Iran has also been pushing back on all fronts here. President Pezeshkian publishing an open letter ahead of Trump's speech, accusing Washington of acting as a proxy for Israel. Tehran also saying Trump's claim that they asked for a ceasefire ahead of this was false and baseless. So the question that markets are really asking this morning is, what exactly does finishing the job look like? The strait is still closed. There are possibly weeks of conflict to come, and investors are really no clearer on how this war ends in the aftermath of the president's speech. Karen?
A lot of dangling questions there, Dan, whether there's even a deal at all down the track. Thank you so much for that. Let's take a look at the market reaction. Treasuries marching higher. You can take a look at those yields, as you can see, again, escalating. We saw some risk-on moves earlier in the week. Markets really hoping that perhaps there could be some sort of ceasefire, some negotiation that was coming to fruition. But now, on the back of that speech last night, as hopes have faded again, you can see those yields have picked up right across the board as we're in the green, the short end to the long end. As you can see, we're 4.38 on that 10-year yield. The dollar, as a result of the conversation points we were just talking about, also marching into firmer territory. It is a dollar positive story again. Euro is on the back foot, down by about 0.5% plus. Sterling as well, similar territory. Big falls in that trade this morning. So real reversal of some of the clawing backward seen by euro and sterling trades. Dollar firmer versus the safe havens, the Swissy and the Japanese yen. Now, US futures, as we gear up for the session later on today, markets also expected to respond. And you can see so far indicated weaker. That said, we're seeing some of the big falls taking place too on the markets across in the Asian markets. We're going to weather that too in the European markets today before we get to that US Open later on. And let's get to Anthony Gardner, who is former US ambassador to the EU. Anthony, let me just ask you about the timeline, because that's what investors are looking at closely. Yesterday, they were hoping they were going to get a signal that perhaps there could be an end in sight. Instead, we have escalation before we get to any endpoint. What do you make of this speech and what we heard from the president?
Well, I'm amazed that the markets are taking this man at his word. You know, he says that the conflict is going to come to an end soon. Markets go up. Then it says we're going to continue bombing, markets go down, and they go back up again. Look, so many things he said in that speech are just patently wrong. He said that regime change has happened and the new group is less radical and more reasonable. But of course it's not. The guards have taken over the country. Everyone we might have negotiated some form of settlement with is now dead. He says that the hard part is now done. Well, of course it's not. It's just starting. He says the strait will open up naturally. Well, of course it won't. it will require a great deal of effort and international effort to open up the straits. He's calling on the rest of the world to solve a problem he's created. The Europeans didn't want this war, most of the countries. They found it a war of choice and not of necessity, and many countries believe it was an illegal war. But he's now saying, you sort it out. So I'm surprised the markets are sort of reacting to every statement he's making.
On that point then, Ambassador, if we look at the ambition and the motivation for the next couple of weeks, what do you think the president is trying to achieve?
Well, I think he's trying to show that he's in command and that he's resolute. I mean, he's discovered the shiny toy that is the incredibly capable U.S. military, and he's saying the way we're going to solve this is by bombing more infrastructure, which is highly doubtful to say the least. And, you know, for a U.S. president to say we're going to bomb any country into the Stone Ages is really words that you would never have expected any president, Republican or Democratic, to use. So he's trying to show that he's in command, but I suspect he understands, like his advisors, that they're actually not in command of the situation, that many of the things that were predictable, very predictable at the beginning, have actually happened. And by that, I mean not only Iran now having its hands around the throat, the bottleneck of the straits, but there are many other secondary consequences as well that have occurred, including inflation, of course, and the fact that interest rates are now going to be stuck and not coming down. But the fact that Russia, too, is printing $130 million a day additionally, and is now more able to prosecute its war in Ukraine, thanks to what's going on in Iran, that Iraq is now being weakened dramatically, you know, that industrial gases and other supply chains are being weakened. You know, all of these things are the reasons why all presidents prior to this one, Republican and Democratic, have not engaged in this kind of policy.
Mr. Gardner, it's Ben here joining the conversation. There was a lot to pick out from that speech, that address to the nation. But what was also interesting, what wasn't there, no reference to pulling out of NATO, something that the president has talked about, that he's considering, apparently. He's said that in recent days. What do you think that tells us? Has he cooled on the idea, or did it not just come into his stream of consciousness as he was delivering the address?
Well, I'm pretty sure he can. It takes an act of Congress. I'm pretty sure that's accurate. So I don't think he can. And I think there are people around him, I would suspect, like the Secretary of State, Marco Rubio, who's saying that's actually not a good idea. Because NATO is not an act of charity, by the way. It is an institution, also helps U.S. interests. So I'm glad he's cooled on that idea.
And then in terms of talking about an end to the conflict and saying the US will be out within 2 to 3 weeks, how much is that down to conversations and discussions with Israel, of course, and whether Benjamin Netanyahu agrees with President Trump the point at which they deem the conflict to be mission accomplished?
Well, I suspect these two countries have now different objectives. One set of objectives is to get rid of the launchers and to ensure that the nuclear program is not in a position to be restarted anytime soon. An important set of objectives. But now another set of objectives relates to the global economy, which is something that other countries, less so Israel, are going to be concerned about. So there are probably going to be diverging objectives here about what is necessary to call this conflict over or to settle this conflict. So I suspect there are going to be disagreements coming up. You know, one point I wanted to make, which is a very important point. You know, it's really puzzling to a lot of people watching this why the president's giving Putin such a free pass. And by that, I mean willing to give him Ukraine at this point, to abandon Ukraine, to cut off any kind of assistance. At a time when Russia, according to many reports, which seem quite accurate, that the Russians are giving targeting information to the Iranians to kill American soldiers. That's really breathtaking. So the United States, the president of the United States, is willing to give Vladimir Putin a free pass on this and abandon Ukraine, which in my view is critical, not only to the future of Europe, but I think to the future of democracy. So this is probably, in my view, the top of the second order consequences of what's happening in the Gulf.
Ambassador, that is fascinating, the comments you're making there, because it does feel as though there are consequences for Europe in the wash-up here, whether there is a closer defence economic pact between the UK and Europe, whether Brexit in some form just got sacrificed as well. What do you think the consequences are as you piece this together for Europe?
Well, fascinating. I think we saw a couple of statements recently by UK Prime Minister Keir Starmer indicating that the UK is going to step up the tempo in analyzing, I won't say rejoining the EU, because they're not using that language, is probably too soon, but certainly picking up the tempo to rejoin some of the important programs of the EU, to become more integrated with the EU, and I think that's important. Look, the penny is dropped in the UK and many other countries that the EU is a useful tent to be in. And those who are claiming, who wanted to leave, saying that the UK would be better off outside because it would be a global player and be closer to the United States, have been proven to be wrong. And remember that Keir Starmer tried his level best for the last year and a half to get on Trump's good side, but it doesn't seem to have paid great dividends. And I don't think it's paid great dividends for the EU as well, certainly in terms of the trade agreement. So a lot of pennies are dropping, and the world looks like a very dangerous and unstable place. So where do you want to be? What club do you want to join? The EU is one of those clubs.
Mr. Gardner, as a former ambassador, you know all too well the importance of words and optics. And I just wonder if the speeches, the announcements by the president are at risk of becoming a devaluing currency, given how often the direction of travel changes, how erratic the messaging swings from a de-escalation to an escalation. And where do you go from making a state of the, not state of the nation, but an address to the nation? Is there a danger that the president's comments start to have far less of an impact than he would like?
You're making a very important point. Words are important, especially when you're president of the United States, the most powerful person or one of the most powerful people in the world. Look, I served two presidents, one, Clinton and Obama. One can say that they made a lot of errors, which is true, but both certainly respected the power of words, and they were quite careful in the words they use, especially when addressing the nation. And so you're right. There's only so many times you can threaten a country, you can threaten to bomb them into the Stone Ages, you can say that the conflict's about to end and then not deliver. And plus, a lot of the words that are being used, as I mentioned earlier in the program, are just not appropriate words to be using at this moment of gravity, when people's lives are at stake and livelihoods are at stake. So you're right, it is a depreciating currency. And at some point, both the other side will stop believing you, and the American people in the markets will just start ignoring you. So there is a danger.
Ambassador, can I just wrap up and ask you about the Strait of Hormuz, because this is what markets are watching very closely, whether we see escalation but no real transaction to reopen the Strait of Hormuz without some sort of international intervention here. But there's also been a lot of reporting from various quarters of the energy market worried that maybe there is now a toll from the Iranian perspective. And there's a point that was raised by Reuters in a column piece saying, look, the Iranians could extract 120 odd billion per year here. They've been offered this effective money spinner to extract money from the world economy. They may go for it. Do you think that could be a consequence?
Gosh, it's very hard to speculate on that. I mean, what a horrible irony that would be. What a horrible irony would be that we would strengthen what is now a harder line, more unreasonable, more militarized regime, and by giving them essentially a cash machine. I can't conceive of that, because I think the world would have to coalesce, including the Gulf, and to reopen the straits through whatever means. And that's not going to be easy, because Iran is so geographically well placed to exercise, as you mentioned, a tolling operation. But I just can't conceive that that's going to happen. It would be too horrible.
Ambassador, thank you for taking the questions this morning. We do appreciate your time. Anthony Gardner with us, former US ambassador to the EU.
Still to come on the show, the UK Prime Minister Keir Starmer makes a pivot to pursue closer ties with Europe. We'll have more details for you next. Plus, farmers are warning of higher prices ahead as the disruptions to the supply of fertiliser put crops in danger. I've been down on the farm and we'll discuss that more later this hour. And don't miss our interview with the former chair of NATO's military committee, retired Admiral Rob Bauer. That's coming up at 9:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Our markets were already primed for another wild ride this week, and ahead of the speech, don't forget markets in Asia had been seeing a strong rally. There were hopes that we might be hearing a conversation from President Trump late last night that there might be an end in sight, but instead more confusion and escalation, in fact, before we get to perhaps any endpoint dangling question mark. And as a result, you can see markets are selling off. We've got oil prices marching higher again, similar to what we've seen over the course of this conflict. Higher oil prices, a trigger for markets across in Asia to sell off, particularly across in Japan, 2.4% weaker, and also South Korea shedding 4.5%. Both of these markets bookending what has been very volatile patterns right throughout this conflict in Iran. In the China markets themselves, 1.2 roughly coming off the Hong Kong and Chinese stock market. To the European futures. The picture this morning, as we look to get going in about 30 plus minutes, we are chasing some downside. The Stoxx 50 futures, the biggest stocks in Europe, set to fall by close to 2%. Several handback anticipated. FTSE futures a little bit more contained, but typically when we see that oil price march higher, it does take with it the energy stocks, providing somewhat of a shield, but still seem weaker by 0.8 on the FTSE futures versus the DAX over in Germany, seen down about 1.8%. So we are bracing for some of that selling. And the big question is, if we're talking about a further escalation, could there be consequences for energy infrastructure? What is it going to mean for heavy manufacturing areas across Europe? Now, US futures, the early picture this morning is also looking suitably weaker, particularly on the NASDAQ. We're seeing down about 1.7%. Don't forget, we recaptured territory yesterday. We're up 1.1%. First back-to-back positive session that we've had since about mid-March. But some of that appetite for stocks now expected to fade as soon as the market opens this morning. Ben.
The UK Prime Minister Keir Starmer has called for the nation to focus on closer economic and defence ties with Europe amid global instability caused by the Iran war. Starmer added that this would be a key discussion topic during a summit with the European Union due to be held in the summer. His announcement comes after repeated criticism from President Trump over the UK's response to the war. Meanwhile, the Bank of England says the Iran war has increased threats to financial stability by causing a, quote, substantial negative supply shock to the world economy. The BOE added that the chance of multiple risks materialising at the same time would increase given the prospects of weaker growth and higher inflation and borrowing costs. Well, plenty there to pick over. And of course, the UK, like many other countries, looking at how to try and mitigate the impact of those higher energy prices. The UK recently being flagged by the OECD as more susceptible to the spike in energy prices, the growth forecast for the UK being lowered by the Paris-based organisation, as well as inflation outlook being raised by the OECD for the UK, now forecasting it to hit 4% this year. So, unsurprisingly then, politicians looking for other avenues. If America is no longer going to be seen as a reliable ally, given these comments from President Trump about NATO and considering, apparently, he said to the Daily Telegraph newspaper, considering pulling the US out of NATO. It's out of necessity. These countries are going to have to look at what are their other options. Not to say that he would necessarily go ahead with that. It may be a threat. Who knows? There are logistical, legalistic hurdles. He has to get it through Congress if he wanted to do that. But it would be, I think, remiss for countries not to look at what other cards they may have in their hands if that reliance on the military defensive pact that has stood since the post-war years is now looking a bit more shaky than it has been before.
When it comes to the UK relationship with Europe, then that was the question I was just asking our guest previously. Will we see some change in the relationship? Because what was floated in conversation by Keir Starmer in the past 24 hours suggested a closer economic and defence relationship with Europe. We know that Brexit set in stone in many ways the very economic relationship we've had with Europe, and every attempt to try and closen or have a closer relationship with Europe is again met with a you can't cherry pick. You cannot decide what parts you want to be in or you want to be in the European project for what parts you want to be out of. We go back over the old Brexit territory yet again. But there is a summit coming up in June, July that may see some sort of sea change in the relationship. So just how dramatic will that be? Dangling question again. And we started out the show with so many more questions and answers. And for me, what is fascinating, it's the distance that we've had in terms of Europe that has been impactful for the growth story in the UK. If there was any suggestion that we could have a closer economic alliance, would that make a difference to the very slow growth that we've witnessed in the UK? Is that possible at this stage? And that is a massive one. The other point around the Bank of England, I mean, that is a very strong point that we heard from Bailey as well. Look, we may see through the shock. They're more concerned, it seems, in their language about the growth shock than they are about inflation becoming unanchored in the short term.
Just going back to the point about close ties with the EU between the UK and Europe, they are not going at this from a standing start. The momentum is already there. Those who have good memories will remember that today marks a year since the US Liberation Day,
yes.
The introduction of those tariffs. And The Economist has done a bit of analysis on this, really interesting. One consequence, they say, has been a shift away from America. That between May and December, trade among Britain, Canada, the EU, Japan, South Korea and Switzerland rose by 12% compared with the same months a year earlier, even as their exports to America fell. So already these countries are looking at other trading relationships, deals with Mercosur, the South American economies. So the momentum has already begun. I wonder whether this is just a case of trying to see how much further and faster those sorts of trade deals can go.
It's a conversation about clubs, isn't it? We just heard from the former ambassador. It's about which club do you want to be aligned with. Europe is going for more clubs. The UK decided it did not want to be part of a club. Was that the right decision when you see so much uncertainty around geopolitics? Does the idea of a club come back into the equation where countries want to align for safety, for economic and defence purposes?